Is the LA market crashing? If you own in Los Angeles or you want to, you've probably heard some version of prices are finally dropping, inventory is up, the market is bad right now. And at the same time, you look at what your home is worth today versus what you paid, and it's still way up. So is the LA market actually crashing? Or are we just in a different chapter of the same long story? I'm Carrie White, real estate agent in beautiful Los Angeles, and on this channel, I share data-driven insights and real stories so you can make informed decisions, whether you're buying, selling, or just keeping a close eye on the market. If you're tired of crash headlines and want the bigger picture, hit subscribe and share this with someone who keeps asking, should I wait for it all to just come crashing down? So in this video, we're going to cover three things: what LA prices have actually done over the last 10 to 15 years, how inventory and underbuilding shape what's possible here, and what that means for you right now with a few real stories from clients who are living this. By the end, you'll be able to answer, is the market crashing? Let's zoom out before we zoom in. If you look at the major LA home price indicators, Case-Shiller, FHFA, long-term county data, the pattern over the last 10 to 15 years is pretty clear. Over the last 10 years, LA home values have gone up roughly 80 to 90% on average, depending on how you measure it. Over the last 15 years, home prices have gone up 150%. So you zoom out even further, one long-run analysis of LA County shows median prices rising 275% from 1990 to 2022, which works out to a roughly 8 to 9% per year on average over that 30-year plus stretch. There's dips and there's plateaus in there. 2008, large pullbacks, sideways years, but the long-term direction in Los Angeles has been up, not flat. And this doesn't mean prices can't fall. We have seen that happen, but it does mean that if your entire plan is to wait for a huge crash, you're betting against decades of history in a market that tends to recover and grind higher over time. Now zoom into the recent window. Right now, the median sale price in the city of Los Angeles is at $1 million, and it's down about 1% compared to the same past year. Zillow shows the typical LA home value is around $956. That's also off a little bit from last year. The median listing prices are closer to 1.15, with active listings and days on market up modestly year over year. So what we're seeing is a small give back from peak prices, not a major collapse. But the market is different. A market that ran very hard from 2020 to 2022 and then flattened and adjusted as rates jumped. The math is really all there. It kind of felt like you were speeding down a highway at 80 miles an hour and you just slammed on the brakes and hit 40 real fast. Statewide data backs that up. California mid-tier and bottom-tier home prices surged roughly 14 to 50% per year from 2020 to 2022. And since mid-2022, home prices have basically tracked back to the same path that they would have been on if they just kept growing at their pre-2020 trend of about 6% a year, which is a huge increase. In other words, that pandemic era pulled a lot of future appreciation forward and quickly. The last couple of years in the market, they've been catching its breath, pretty much almost taking a break. And that's very different from a crash, but headlines, they're designed to make you read them. And the proof is in the pudding. The market has slowed down, but it has not crashed. But let's talk about the other half of this equation, which is supply. For years, LA has built far fewer homes than it's added people. It's fought over zoning, density, and new projects, watched construction costs climb, land, labor, materials, fees. Even now, inventory is up from the absolute lows, but still constrained. LA County's median list price and inventory trends show more homes on the market than a year ago, but we're nowhere near an oversupply. Statewide analysis say the same thing. Inventory climbed in 2024 and 2025, which was great, but it's still lower than our pre-2020 levels, and affordability is a limiting factor, not a surge of homes on the market. Practically, that means higher interest rates have cooled demand and changed behavior, but there is no giant wave of new homes flooding the market in LA. In most West Side and core LA pockets, you still can't easily replace what you own. This mix, higher borrowing costs plus chronic underbuilding, is why LA looks weird instead of collapsed. So here's what this feels like for a lot of West Side owners. A client who bought more than 10 years ago calls and says, everyone says the market is bad. Our place is worth so much more than we paid. Are we about to lose that equity? Should we sell before it all comes down? We look at their specifics, what they paid versus what conservative comp suggests today, how much debt they actually owe, what happens to their equity under a few scenarios, flat prices, a modest dip, a modest raise. Even when we build in a reasonable pullback, they're still far ahead of where they started because the last decade's appreciation has been so strong and because they're carrying a low mortgage rate with a manageable payment. Once they see the math, the question shifts from, is the market crashing, to, does this house still fit the life we're living now? We often end up with a clearer sense of whether they want to move for lifestyle reasons, a timeline and conditions for a future move, and permission to stop panic scrolling crash content. The market didn't suddenly improve in that meeting. Their sense of risk did, because they saw their 10+ year story in context instead of reacting to a 1-year chart. Then there's the flip side, owners who feel the market hasn't done enough for them. I think a lot of West Side townhome owners, they bought more than 5 years ago or even 10 years ago, and they've seen single family homes nearby skyrocket. Their townhome hasn't appreciated at the pace of these single family homes. They come in feeling, we picked the wrong thing, townhomes don't really move, if the market's bad now, maybe this is our chance to get out. When we walk through the numbers, their townhome has gone up over the last 5 to 10 years, just not as dramatic as the best single family homes have, and is still anchored by Santa Monica's structural shortage, high demand, and rentability. The question becomes, is their asset underperforming, or is it just different? We then layer in what selling now and buying a different type of home would look like, what keeping it as a home or future rental could mean over another decade, or how much of their frustration is about their goals versus comparison to their neighbors. Sometimes we do reposition into another asset. Sometimes the conclusion is this has been a solid, if not spectacular, performer. We're going to hold, maybe improve it, and reevaluate later. Again, the market didn't crash or boom in that conversation. We just align their expectations with the reality of their segment. On the buyer side, the emotional story is different. A lot of people come to me saying, we're waiting for a real crash. Prices have to drop 20 to 30% for this to make sense to us. They've watched national videos and charts that don't distinguish LA from everywhere else. And when we look at how few truly good homes come up each year in the pockets they want, overlay that with 10 to 15 years of appreciation data, and add the fact that building new supply here is slow and expensive, it becomes very clear that LA can absolutely have corrections and softer years, but the classic fire sale version of a crash is unlikely to show up in the exact neighborhoods and price bands that they want. So the question becomes, do we buy now with today's prices and rates because this home actually fits our needs for the next 7 to 10 years? Or do we wait on purpose with a plan because our life and finances aren't quite ready yet? That's very different from waiting for a crash that may never arrive in their perfect market. So over the last 10 to 15 years, LA has seen very strong appreciation on the order of 80 to 90% in a decade and more than 150% over 15 years, even with the bumps. The last couple of years has been about flattening and modest pullbacks from a rapid spike, not a broad collapse. So LA remains structurally underbuilt, especially in desirable built-out pockets, which puts a floor under values even as rates bite. So no, what we're seeing right now does not match a classic crash. It's more like higher rate, more thoughtful, more segmented market. When good homes still command strong prices and anything mispriced, tired, or poorly presented gets exposed. And for someone like you, equity rich, market savvy, serious about your next move, the better question is this version of Los Angeles, with this mix of long-term appreciation and current weirdness, what's the smartest move for my life and my balance sheet? If you're trying to figure this out while you sit on this spectrum, am I at risk? Am I fine? Am I missing an opportunity? I'm happy to do a long view checkup on your situation. What does that mean? We look at what you paid, where your home likely sits today, and what 10 to 15 years of history suggests for you and your type of property. We map out a couple realistic paths for the next 3 to 5 years. Say maybe you stay, improve, diversify, and we ground that in your actual life. If you have kids, work, commute, lifestyle, not just lines on a chart. If that sounds useful, reach out. And if you want to keep up with how this story evolves from rates to inventory to the micro markets you care about, subscribe to Carry TV and watch this together with my other videos on interest rates, buying now or waiting, and whether it's a good time to sell.